in 33 years, and including silver squeeze, I've never experienced anything like we've seen since last Saturday, Sunday, with all the craziness in the banking system.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And amidst a rather volatile time in the banking world, it is time to check in on the physical silver market once again with Andy Schectman of Miles Franklin, where each Tuesday we go over what's been happening. And obviously, in the midst of everything going on, I know it's been rather busy week. So, Andy, appreciate you making some time, and thanks for joining me today. How's everything going with you?
I always make time for you, brother. Time for you is a joy. It's a pleasure. It's a respite from the craziness. It's good, Chris. It's good. Everything is good. I hope you are too. I'll tell you right off the bat, in 33 years, and including silver squeeze, I've never experienced anything like we've seen since last Saturday, Sunday, with all the craziness in the banking system. And it's my head feels kind of like it's been encased in styrofoam, but other than that, it's all good.
Gee, well, that doesn't sound too ideal, but hopefully you get a little rest in there. But why don't you catch us up to speed? Obviously, you said last Saturday meeting a week and a half ago, because first we had Silicon Valley Bank and then a couple of the other banks, and then perhaps not directly connected, yet somewhat in the same sphere, we had everything happen with Credit Suisse, seemingly risk on, risk off for a few days until over the weekend. Credit Suisse now being taken out by UBS, which sure has caught people's eyes quite a bit. And perhaps you could tell us what it's been like in the silver world and how people are responding there.
Yeah, when we talked last Monday, I kind of got into it a little bit. I told you that this was different than silver squeeze. And you asked me, are they new clients or are they existing clients? And I told you that what this was the difference between silver squeeze was massive influx and demand of all new people trying to capitalize and make a profit on what had happened with GameStop and AMC, and the ability to perhaps squeeze the commercial banks and squeeze the silver price. And people wanted to make money, and the motivation was greed. Not specifically, but if you realize as human beings, we're motivated by greed and by fear, and the greed aspect was off the charts. And we worked for days and days and days taking orders, people who were interested in making a profit. And those people, I think, have been somewhat disappointed, obviously, over the last couple of years over silver's lack of performance. And that's a different story altogether. And quite frankly, I think it's only making it more appealing. But what we've seen over the last week or so has been a whole different level of anxiety. It has been fear. It has been not only what happened with Signature Bank and Silicon Valley Bank, but also what Janet Yellen said a few days ago when she came out and was grilled by the representative from Oklahoma, who said, Madam Secretary, if indeed one of my constituents has $5 million in a regional bank and that bank goes under, you're telling us all that they'll be made whole and those banks will be bailed out, just like Signature and Silicon Valley Bank did. And she said, no, that's not the case. That's not what I'm saying. And he said, well, I don't understand that. She said, listen, the banks will have, those banks that are not too big to fail, systemically too big to fail, let's call it, such as JP Morgan or Bank of America or Wells Fargo or Morgan Stanley, any of these monstrous banks, these commercial banks, well, those are too big to fail. They're going to get bailed out. But these regional banks, if it doesn't meet the criteria of being too systemic, and that criteria will be examined and determined by the majority, the super majority of the FOMC, the FDIC, and herself, Janet Yellen herself, by then they'll be sent to the woodshed, and they will not be bailed out. Only those banks that, as she said, are too systemically tied to the industry. Well, evidently, that's what Signature Bank was. Evidently, that's what the Silicon Valley Bank was. And what she did, as far as I'm concerned, is treasonous. What she's doing is forcing everyone in these small banks. I grew up in Minnesota, and you go outside of Minneapolis and you're out into the sticks, and there are lots of small banks that have helped farmers and small businesses get to where they are. They know them by first name. They've been working with their family for 2 generations or longer. And now these banks will be just sent to the slaughter if indeed they fail. And when you look at these banks that have loaded up on treasuries and mortgage-backed securities over the years, paying the depositors 0.25%, buying treasuries at 2%, making 8 times what they're paying their depositors, okay, fine, they can live on that. And they're marked at par, these bonds that are on their balance sheet. They're not marked to market until they're forced to sell them, which is stupid in and of itself. But when you realize there's very little capital in the banking system, because during the pandemic, the president allowed all of the reserve requirements to be stripped down to zero. So little cash on deposit for redemptions, or when people come in and say, I want my money. And that's what happened with Silicon. And that's what happened with Signature, where there was a rumor, there was a feeling that something wasn't right, and there was a run on the bank, and they wanted their money back. And they had to sell these assets, these treasuries or these mortgage-backed securities, which are toxic right now. They've lost 50, 60+% of their value. And the only time that that is realized is when they're sold. Well, how do you come up with the cash to pay the depositor who wants a redemption? If you don't have it, well, you have to sell your bonds on your balance sheet, which are all have been eviscerated by the increase in rates. So you see enough people come into these banks at once, and these banks will go under in 24 hours, just like we saw with Silicon Valley Bank. And what she said is precipitating this run on the small banks, these banks that 5,000 of them around the country that have helped small businesses around America for a very long time. And all of this money now is fleeing. Now, the traditional conventional wisdom says it's going to JP and to Citi and to the big banks, to Bank of America, but a lot of it is coming into this industry. And I've never experienced anything quite like this, where, we're doing a month's worth of business almost every day. It's the damnedest thing I've ever seen. And people are freaking out, Chris. People are really, really scared. And yes, a lot of that money will transition into the commercial banks, flocking into a handful of very large banks. But you have basically sealed the fate of a tremendous amount of these regional banks that have been the cornerstone of small businesses around this country for a very long time. Because if you are, let me put it to you this way, I bank with a bank through my business that I'm considering moving a good portion of it out of into one of these larger banks for that exact same reason. And this bank has done so much for my company, but it's scary, because if they go under and Janet Yellen doesn't think they're systemic enough, what does that mean? And the question is this intended? Was this precipitated? Have they thought this through? Are they trying to herd everyone into a handful of banks? These are the type of things, the discussions that I've been having with people, that is way different than silver squeeze. This is not about spending $4,000 or $5,000 or 10 grand to squeeze the banks. This is about emptying your bank account and spending $5 million on anything that I can get, because I am terrified. And that this is only going to precipitate more of the same thing. And God help us if Japan and or China dump their $2 trillion in treasuries, and God help us if Saudi Arabia makes that long-awaited announcement. They've already told us they're joining BRICS. They've already told us they're open to taking other currencies for oil. God help us if they make that statement that we're done accepting just dollars, and what happens to interest rates then, and what that does to the entire banking system, especially these banks that she told us will not be bailed out. And as a result, I have never experienced the type of anxiety and fear that I have seen over the past week, to where we are working, I swear to God, 18 hours a day. I could work all night long. I could work all day and all night long, replying to emails, answering phone calls. And it's hard to even explain what it's like. And there is no question in my mind that fear is a far stronger motivator than greed. And when you look at what's happening with the states like Missouri and Idaho and Wyoming and Tennessee and Mississippi and Alaska and all of these red states that are now telling their citizens, hey, We need to be able to hold gold not only in the state coffers and in our own state funds, but a lot of these states like Wyoming and Missouri and soon to be Kansas and others are allowing gold and silver to be used for all debts, public and private, not only paying your property taxes, but paying the shop owner if they should so deem appropriate. This is going to wake people up. You put another year's worth of a 16% decrease in the 10-year treasury and the stock market getting clobbered by over 20% in the S&P, you throw in instability and fear about the safety and sanctity of the banking system, and then you see other issues come on, like the state say, hey, people, you should be buying gold and silver, waking these people up to an alternative that they haven't seen. And it is a recipe for everything in this industry to be gone. And like I've been saying on your show and others for 2 years, the little boy who cried wolf, I admit it. The wolf does come, and the wolf is coming. And one of these days, the wolf is going to eat every bit of supply in this industry. And here again, last week I told you I was shocked that premiums haven't gone up. Well, they're starting to go up again. They went up again on Eagles. They've gone up again on everything. And it's getting impossible to get. And if you ask any owner of a precious metals company, SD, JM, APMEX, us, Money Metals, ask them all. They'll say the exact same thing that I'm saying here right now. They've never seen anything like it. This is silver squeeze on steroids, as far as I'm concerned.
Yeah, I've seen that reported, and from people I've talked with in the past week, that's pretty much consistent across the bullion dealers. And Andy, it sounds like the people that you're talking with, perhaps not buying into the statement we got on Sunday night from Janet Yellen and Jerome Powell that the capital and liquidity positions of the U.S. banking system are strong, U.S. financial system is resilient. Seems like that's not exactly calming people down right now.
No, it's not. I mean, I think it's actually making people more anxious, certainly more anxious, because it just, I think, is showing just that this is a systemic deal. Now, Credit Suisse is what is called a globally systemic, too big to fail bank. They were too big to fail. But what isn't mentioned in any of this is the Swiss Bank Corporation, I believe is their name. They're the second largest bank in the world. They fired 9,000 people recently, and that was after receiving a $20 billion injection from the Fed. Not the Bank of Switzerland, not UBS. The U.S. Federal Reserve gave the second largest bank in the world in Switzerland $20 billion lifeline. And so this is very deep. And this goes to the meeting in November. This is why the FDIC knew this was coming. They know it's coming. And, the decisions that these people are making, it's shotgun decisions, and they're not thinking about the ramifications of what it really means. It just means more quantitative easing. You look at the Fed balance sheet, Chris, it's gone up by $300 billion in a week. That erased 50% of all the quantitative tightening over the last 8 months in 1 week. What does that mean? Does that mean we're done tightening? Does that mean that we're going to pivot? Were the bond traders right all along? Are they going to raise their rates a token 25 basis points? That's spitting in the wind with the amount of money they're throwing into the system. Yeah, you can raise rates a little bit, but when the balance sheet goes way up like this again, it mutes all of the tightening, especially when you pussyfoot to 25 basis points, or maybe just do nothing because of the continued strain on the system. It's the strain on the system by raising rates that is causing this problem. And maybe they're going to say, well, why should we even raise 25 basis points? We have to quantitative ease up the yin yang and erase half of 8 months worth of tightening in 1 week. Why do we want to raise it all? I mean, they're so caught between a rock and a hard place. And I guess what's happening, maybe for the first time, is that the people outside of this little shell that you and I have been talking to for so long are waking up, and they're afraid. Everyone feels this and sees this. And it's not just here in the United States, it's globally. But I think this is a very frightening precedent that has been set. And I think that, I feel bad for these small banks that have done so much if you realize that small businesses have represented as much as 40% of GDP in this country for a long time. And now the banks that have helped these companies get to where they are on a first name basis, they're often a lot more lenient and liberal in terms of policy and helping and working with the banks than these gigantic banks are. And now you're just giving them a death sentence by saying, yeah, well, if we deem you're not systemically important, you're gone. And, you know, my point is this: fine, if you're going to let the banks go, let them go. Fine. But you cannot pick and choose who lives and who dies. That's just as stupid as weaponizing the dollar and saying, Russia, you're out, and the other people, you're not out. And the things that we do are okay, but what Russia's doing is not. And, you know, all of these things are precipitating not only problems inside the border, but it's also creating chaos outside the border as all of these countries are leaving the dollar. Look at Mexico just formally applying to the BRICS nations. Now, they're a long ways away from getting there, but you hear of Japan talking about applying to the BRICS nations. Heard that on Jim Willey. I think it was on your show. Not only that, you hear about Australia and New Zealand. All of these countries are realizing what we are doing is just beyond idiocy. And then you see Xi Jinping go to Russia and meet with Putin and cement their drive to break the Western hegemony. And it's happening. And what we are doing inside the system is only expediting this craziness. And people are finally waking up. For the first time in my career, not just the little grouping of people, the hard money people, the right side. No, this is moving throughout the entire country, and it's bipartisan. This is not just Republicans or right wing. This is the whole gamut of people who are scared as to what's going on, and they have been voting with their money and pulling it out of the banks and buying massive record amounts of gold and silver.
Yeah, it's not entirely shocking. In fact, during one of the calls we did last week, I remember talking to a few of the guests and saying, I wonder if we would see $2,000 gold if the Fed meeting comes up and they actually pause. Well, sure enough, we saw that late Sunday night into Monday morning. There's gold crossing over 2,000. I believe it got up to just about $2,010 before at 4 a.m. in the morning, New York time, declining lower and ending Monday around 1978. But were you surprised to see that gold getting back over the $2,000 mark? I mean, on one hand, I suppose not, because many of us were expecting a move higher on the open in both gold and silver. It was interesting. Bitcoin has actually gone up quite a bit in the last couple of days, though we saw the metals open lower Sunday night, yet did cross over $2,000. So perhaps a reflection of people noticing what you're saying there.
Yeah, and well, and I'm not surprised to see it get hit down again, because what is gold and silver? It's not a commodity that they want you to believe. It is the barometer of the health of the system. And betraying the price smashes are the outflows that continue to happen. Over 3.5 million ounces of silver month to date have left the COMEX. Where's it going? When it leaves the COMEX, it loses its industrial liquidity. It's gone. You know, the registered category has gone up a bit, and over 7 million ounces we talked about a few weeks ago went in. Is that to put a little bit, and that all came from JP Morgan, and they're putting that in there to make people feel that the sanctity of the COMEX is safe, kind of like the box or the bags of rocks they found in that were supposed to be nickel in the London Metals Exchange. All of these exchanges, these Western exchanges, are being bled dry, and they're losing credibility. And, you know, when you see the amount of metal that is leaving the COMEX and leaving the LBMA, it is by the biggest money in the world, and they use these price smashes to their advantage. It's exactly what they do. And I don't know. I think, no, I wasn't surprised to see it go that high. And I would have bet my life that, you know, 50-50 anyway. I'd say that's probably a little strong. 50-50 that it would have gone up higher over 2,000. But I had a sinking feeling that last week they let it go into Sunday night, Monday morning. This week, 2,000 is too big of a round number, and they're going to fight it. because again, it signals the emperor has no clothes. It's the little old man behind the curtain in the Wizard of Oz. They don't want these big numbers to be broken, but all that does is play into the hands of the big accumulators, whoever the hell's draining the exchanges, the Bank of India, the Bank of Turkey, all of the central banks. It plays right into their hands. And, trust, we are losing trust. The Western markets are losing trust. The LBMA is losing trust. And, so to see when you look at a run on the banks like we saw, look, the fractional reserve system of the COMEX is far worse than what is the fractional reserve of the banking system, which is 10 to 1. It's 15 to 1 right now in paper on COMEX. There's 15 ounces of paper per one physical ounce. So if everyone runs to it, 14 of them don't get anything but cash. So this is the problem when you do fractional systems or rehypothecation, and that's exactly what's happening. And you look at gold. Gold had its 11th straight month of outflows coming out of COMEX. 285,000 ounces left the vault so far in March, and so the big money continues to slowly drain the system. If you do it too fast, you wake everybody up. If you do it little by little and keep screwing with the price and manipulating the price, you're just playing right into the draining of the exchanges. And that's exactly what they're doing. I really do believe they are purposely doing this methodically and slowly. And they're trying to squeeze as much out of the system as they can. And they'll let it go up, and then it will come down, and there'll be volatility, and it won't catch the eye of the mainstream. What has caught the eye of the mainstream is, where do you put your money if you can't trust the banks? And where do you put your money into stocks that are at all-time highs and have performed poorly in this rising interest rate environment, or bonds? Where do you put it? Maybe into short-term treasuries. That's probably where I would put it if I didn't know where else to do it. But I sure as hell wouldn't leave it in a small regional bank. And I feel bad about saying that, but it's the truth. And this is exactly what this environment is like right now. I have hundreds and hundreds of emails and phone calls that I will attempt to get back to tonight, that I'm already days behind on. And I mean, that's not how this industry has ever been. And they keep coming. And I don't know. I think people are waking up, Chris. My thesis about product disappearing and premiums rising always centered around an awakening of the public, that there's only 0.5% allocation to the entire financial matrix and precious metals in this country until the public wakes up. And when that happens, it's gone, it's over, it's done. And look at the US Mint. They continue to underwhelm and underperform in allocations of silver, and premiums on silver eagles went up again. And here we are, after what I've been begging people for the last 2 months, saying premiums have gone down to crazy levels, and there's no reason why they should have, other than the fact that people wanted to get out and enjoy the holidays, and the new 2023 allocations came in, and well, that's ended. I mean, that's ended. And I guarantee you, when all of these retail companies like mine run out of product, the distributors are going to charge more money to move forward and get your next batch of stuff, that we are now competing with a much larger group of people, not just in North America, but around the world, who are looking to protect themselves from the continued debasement of paper currencies and the craziness, not only monetary policy, but geopolitical stuff that is getting scary. And I think people are finally getting it. And maybe this is just the very beginning of what you and I have believed would have come a long time ago. And that's the curse, that people who see things maybe differently than others, and maybe they think they see it clearly, but mathematics and economics have a way of giving you those glasses that you think you see it clearly through that spectrum of math and logic and economics. But when you have the ability with such great magnitude to manipulate the system, it certainly changes it adds variables and delays the inevitable. But the inevitable always comes. The debt has to be paid either by the purchaser or the person taking the debt, or the person issuing the debt. Someone's got to pay for it. And, you know, I think we're getting to that Rubicon, and that's what this is all about.
Yeah, and in there you mentioned that the premiums have gone up. Can you give us an idea about how much, perhaps aside, we'll leave the Eagles aside, but for some of the other products, what kind of increase were we looking at so far?
I have been the least expensive in the country for the last week. And I'm telling you that everyone in the country on everything in terms of coins has gone up almost $2 an ounce, if not more.
Okay.
Just like that. On everything. Bars, coins, rounds. Junk silver is gone again. And we had a lot of it, it's gone. And it's impossible to find. I got, you know, people that want $1 million worth if I can find it. Can't find it. You want to buy, you know, little dribs and drabs here at huge premiums. That's gone back up to $8, $9 an ounce over spot premium. All of the sovereign coins were in the low threes. They're all $5 or higher now. With everyone, maybe mid to high fours up into the fives, just like that. And I said it would happen, and that's the part that's so maddening. You know, I listen to myself talk when I talk to you and others, and I'm thinking, you know, I'm saying there's this isn't going to last, and I'm saying, yeah, they're going to think you're full of shit. They're going to think you're just talking your book, but I'm not. I mean, after all of this time, I hope people will understand I'm genuine, and that's the one thing I am. I'm not the smartest guy in the room. You're a lot smarter than me, Mr. Wharton and Mr. Wall Street. You have more of an education in this than I do. But what I have is 33 years of watching this game play out. And I'm telling you, I've never seen anything like this, ever. To the point where it scared me so much after being poured on by people for days, how terrified they were. It started to affect me, and I pulled all my money out of US Bank. Should I have done that? I don't know. Only time will tell. But I started not being able to sleep. The 4 hours I was trying to sleep, couldn't even sleep. I'm like, my God, what if I lose all my money that I have in there? I mean, and this was before Janet Yellen came out and said, well, we're going to let the systemically banks live, but the others die. I mean, it's a scary, crazy ass time where everything is upside down. Everything. Like what they're going to do to President Trump tomorrow, and ignore Hunter Biden. They raid President Trump's home at 5 a.m. in Mar-a-Lago, yet they find 10 times as many documents that President Biden has, and they don't do anything about it. I mean, this two-tier justice system is frightening as hell, and it's upside down. And you wonder, where are we? You wonder, why is it that we can give 114 billion to the Ukraine as our borders are being eviscerated, as our infrastructure is crumbling? We give pensions to the Ukrainian government as there's a $1.75 trillion pension shortfall in this country. What the hell is happening? That's what people are waking up to. And if you haven't woken up to that, it's time to take some smelling salts or something, because this is not the country that you and I grew up in, Chris. It's not. I mean, I hope to God that some semblance of sanity prevails. But if they actually do arrest President Trump for something that happened 7 years ago, when it is far less worse than just about anything that we've seen by other presidents, both Republican and Democrat, I don't know, man. It just is an indictment of this entire system. And if there isn't a better reason right there to mitigate your exposure to the system, to the dollar, to the banking system, to securities, and remove counterparty risk. And what does Doug Casey always say? Gold and silver are the only assets that are not simultaneously someone else's liability. And I think that's what people are waking up to right now more than anything.
Well, I hear you. Certainly a lot going on out there. And perhaps the last question I wanted to run by you, you mentioned a little bit about the junk silver. Are there other products that we're getting to the point yet where they're getting delayed or unavailable yet? Or how is the availability?
Silver Eagles are close. Silver Eagles are close. Now, I have people, and we've talked about this, that only want American issued items. And I'm not going to debate that one way or the other. I mean, I'm a U.S. Mint reseller. The U.S. Mint has shaped my career in many ways, but backdated Silver Eagles are 4 or 5 weeks out. The 2023s are available, but they're coming in dribs and drabs. And other than that, the other things are coming in, and we've been able to buy up all we possibly could. I don't know how long that lasts for. you continue to see this type of environment, or you see one more, if the market sniffs something of another bank run or a couple of banks that collapse. I mean, here again, you're seeing all of this intervention to stop what would have been staring into the abyss with like Credit Suisse and all their systemic relationships and their derivatives. You see one more of these things, and I'm telling you, you wake up 5% of the public in this country, and everything will be gone. It will be. I mean, gold buffaloes now, I had a couple thousand of them. They're I don't know, 3 weeks out. And we're buying everything we can from the US Mint, everything. So I'll put it to you this way. From December until the beginning of March, we had more product than we could sell. We were choking on it, and premiums were almost as low as they were prior to the pandemic. And I told everyone that this wouldn't last, that this was just a sweet spot, that this was a great opportunity. Well, what else is any guy going to say who owns a metals company? I meant it. I mean it. And I really hope people understand it. I don't do these podcasts for my health. Yeah, I have a business. I really do try to help people. I really honestly think that you've helped people, so many people. I try to help people. It's one of the best parts of my job. Yeah, I can make money, but I can also go to bed at night thinking I'm helping humanity, just a little bit of it, right? And I'm not going to say I told you so, but I told you so. It's happening in spades right now. So, what is a $2 increase in premium? It's a lot. It's 8, 9, 10%. What is it? Or 8%? It's a lot. And 7%? It's huge. I mean, that's 3 times what a dealer in my position makes on an order. And that happened in a week. What's going to happen if we see another week like this, or another problem and an awakening by the public? So what products? Junk silver, silver eagles, it's spilling into the gold buffaloes. And everything else is kind of iffy. I don't know what other companies are like, but I once again, I told my operations, buy everything that's not nailed down, go into our line of credit. I don't care what it costs, buy it all. And so we've had stuff coming in and have stuff coming in, but most of the orders at this point, because of what happened last week, there's a little bit of a gap because we had to order more. So it's all coming in this coming week, or has just come in. But it's one of these deals where after we sell out of this next batch, I have no idea. I think by our next call next week, Tuesday, that there's a high probability that I'll say premiums have gone up again and delays are here again. And so that's the honest to God truth.
Well, there you have it. Plus, we'll see what the Fed comes up with on Wednesday. Just adding to the, I want to say adding to the fun, because I don't think this is fun for a lot of people. And just unfortunate to see some of the things happening in the world. Reminds me a bit of 2007, 2008. And there's that part of me that hopes that does not become more like that. And there's the part of me that looks at what's going on and the effects of taking interest rates down to 0 and piling on QE, and then doing what we've seen in the last year. So perhaps not.
If you look at, Chris, if you look at 08, this is on, they should have let the force burn in 08, but they didn't. They papered it over. The Fed papered it over with over $8 trillion in increases to their balance sheet in interest rate sensitive investments like treasuries and mortgage-backed securities, which created enormous distortions in asset prices and in balance sheets. And all of these banks that have loaded up on bonds over that whole 12-year period at the lowest interest rates in human history, they're sitting on mountains of toxic assets. And the weird thing about this stupid banking system and the way that they're allowed to do their accounting, those bonds do not have to be marked to market. They're marked at par. So their balance sheets seem better than they are. And you have like almost 700 billion in unrealized losses across the banking sector. And when there's a run on a bank, because they don't have the ability to give the money, because they only have like nothing in terms of reserves, they have to sell these bonds. And in one day, it brought down Silicon Valley Bank. Well, what's it going to do to these other banks that all have the same type of problem, sitting on toxic assets? And I don't know. I guess we'll see. But don't mean to be so pessimistic, but this is the craziest environment I've ever seen. Not just in terms of business volume, but just in terms of the decisions that our leaders in administration continue to make and continue to bring us down a path that is just unexplainable, both domestically and internationally. And it's time for people to buckle up, and it's time for people to de-dollarize the way the central banks are. The second most gold in history they bought in 2022, and that pace is accelerating. The difference from December to January was a 192% month over month increase by the central banks. They see it, the commercial banks see it, the sovereign wealth funds see it, the family offices see it, you see it, I see it. It's time for the public to see it. And when that happens, it's going to be nuts in this industry, more than it already is. So I love coming here, Chris. I appreciate that you let me rant and you just sit there. I appreciate it. And that thank you. I feel much better now. And but I think that next week, Tuesday, it'll even be crazier than it was this week. I hope I'm wrong.
Well, the silver therapy line, as I call it some days.
Yes, that's right.
I hear you, and yeah, appreciate everything you're sharing there. People did have questions or are looking to buy or sell gold or silver. What is the best way to find out more, or if there's anything that they may want to look into?
Well, of course, Arcadia at Miles Franklin is always the best place to go when watching this show, and we make sure that any of your listeners are getting the best price in America and personalized service. And you know, it's just we're just really glad that people are listening. And this week we've sold so much stuff we don't even have a special. And I hope to have one again next week, but who knows what the market may bring. But Arcadia at milesfranklin.com is a good place to get your questions answered. And like I said, I just appreciate being here, Chris. You know, you're a brother to me, and I love being here with you, and look forward to riding through this craziness with you. And I think it's going to be a hell of a ride over the next few months.
Well, can only imagine what will be coming next, but appreciate you making some time and sharing what you're seeing. I know a lot of people who look forward to the calls each week, and we shall see how it goes over the next couple of days, and hope you get a little rest in there too. And thanks again for making some time.
Take care, my man.
Well, thank you, Andy. Appreciate this week's update as always, and not surprised to see that a lot of physical gold and silver buying has continued given everything that is going on out there in the financial environment. Real quick, before we wrap up, did want to thank First Majestic Silver, who brought us today's video. Did have news out from First Majestic Silver after the close yesterday, as they have announced that they are temporarily suspending mining activities at Jarrett Canyon. Stock is down quite a bit today, and the news comes as a result of a series of setbacks that the company has faced in terms of trying to ramp up the production there and also increasing costs and expenses on the project. Did talk with management last night. One of the things that they were pointing out was that despite the large drop in the stock price, that Jarrett represents only 10% of the company's net asset value, while it did represent about half of the $188 million the company was planning to spend in 2023, and that they do expect the move will improve their cash costs and all-in sustaining costs going forward, and also returns First Majestic to a primary silver miner of more than 50% of revenue coming from silver. So I'll put the link to the press release in the description field below so you can take a look at that one. Certainly a big event for the company. But with that said, going to wrap up for now, but we will see you again tomorrow.